Hello and welcome to the IPO review with me, Geetu Moza. And today we are going to have an insight into the initial public offering by MedPlus Health Services. Pharmacy retail chain MedPlus Health Services IPO will remain open for subscription from December 13 to December 15. Price point has been fixed at rupees 780 to 796 per share for its 1,398 crore rupees initial share sale. IPO comprises fresh issuance of equity shares worth 600 crores and an OFS aggregating up to 798 crore rupees by promoter and existing shareholders. To talk on the issue, joining me now is Mr. G. Madhukar Reddy, MD and CEO, MedPlus Health Services. Welcome, Mr. Reddy.
Thank you.
From 48 stores in Hyderabad to operating India's second largest pharmacy retail network of over 2,000 stores now, how has the journey been and why did you think of coming out with an IPO? How does it help you?
So, obviously, the journey has been a long and, I would say, fairly satisfying one. We started in Hyderabad in 2006, and this company was a result of an idea which I had in business school. I was at Wharton, and in my fourth semester, I came across something which said that 30% of all fake drugs in the world are made in India. That got me thinking about a plan, about a company whose main, USP could be guaranteeing genuine medicines. So I wrote that business plan in my fourth semester, came out of school, raised $500,000 from friends and family, and came to Hyderabad in September 2005. And our first 47 stores opened 4.5 months after that. February 2006, we opened our first stores. And since then, we have basically had several venture capital and private equity investors, 3 sets of them. And we currently have Warburg and Premji Invest out there. And from 2006 to 2019, for various reasons, for FDI reasons, for, let us say, the industry itself being not very well known and all sorts of things, we raised only around 234 crores. So that, though, helped us basically go from 0 to 2,000 crores in revenue and more than 70 crores in profits. We already had around 1,500 to 1,700 stores. So while we were profitable, we were not able to accrue enough cash to grow. It was then that we raised another round of 200 crores from Premji Invest. So all in all, the company has used capital very, very carefully. We have basically, managed to grow with very little amount of money. But now we feel that we have a fantastic platform. We're there across 7 states. And when I say 7 states, it's not just 7 states. We're there across 6 of the 7 largest cities in the country. Our model is a cluster-based kind of approach where we set up a store or a warehouse in a large city, set up as many stores as possible around that to make it profitable, and then go down to tier 2, tier 3, tier 4. So that way, if you look at it, and we are going down city by city. So we now have 6 of the top 7 cities. The next one would be Delhi, and then Ahmedabad, and so on, right? And whichever city we set up our base, we enter the entire state after that. Because once the warehouse is, profitable, once the warehouse cost is taken out, then you just keep adding stores out there, and it's just the cost of transport, and you become more and more profitable. So we have followed that model. We now have a fantastic platform from where we can grow, show really explosive growth. The fact is, in India, only 10% of the overall sales now comes from organized retail. And there are distinct advantages to organized retailer out there, both in terms of, implicit, genuine medicine kind of thing. Second, the better price, which you can actually give. Our scale allows us to give a discount which no one else can match. And third, fill rate is very critical, and we basically using technology and using let us say, better resources than most small independent operators can have, are able to give a far better fill rate. For all those reasons, people are coming to us, and we continue to grow. Now we feel that taking some additional capital, now is the right time for us to take additional capital and really grow. Hence, we're basically approaching the public. It's mainly, for growth, one, but couple of investors, because we wanted to make the size of the issue slightly larger, to a size which enough people can participate. I requested 2 of our institutional investors to sell a portion of their stake, and hence they are selling. But they retain a significant chunk of their stake. I am not selling anything at all. So it is purely for growth and nothing else.
How does the shareholding pattern change post the issue goes through successfully?
Not significantly, in the sense that the three largest shareholders will continue to be me, Warburg Pincus, and Premji Invest. So I will go down slightly from 43% to 40%. Me personally, and along with the two holding companies which I have 100% of. So I'll be at 40%, and the other guys will be roughly at around 16 or 17. So roughly around 70% will still be held by the three large investors out there. The rest will be held by the public and the institutional investors and everything else.
If we talk about the company's product mix, primarily comprises of branded pharmaceutical products, private label pharmaceutical products, and then you have FMCG consumer goods and private label consumer goods. Which of these categories does the company derive maximum revenue from?
Revenue, of course, comes from medicines for us. 80% of the thing comes from medicines overall. 24% comes from FMCG. Medicines themselves, I think we will, loosely classified as FMCG and non-FMCG. You could say medicines have some of those things like home health monitoring devices like glucometers and all the other things and all, and a little bit of the surgical goods, but largely pharmaceutical products only. And these are all branded generics.
Do you see the product mix changing going forward?
As we go deeper and deeper into the cities, today we have 350 odd stores, but the goal is to actually, in each city, right? Hyderabad, Bangalore, and Chennai have roughly around 300 to 350 stores. The goal is to continue to make, go deeper and deeper into these cities, along with going deeper into the tier 2, tier 3, tier 4, of course. Make it almost like a convenience store where we are present at every street corner and everything else. Which basically takes care of the convenience aspect for the customer, one, but which also allows us to deliver really quickly when the omni-channel button is pressed. So we also do online delivery. Right now we do 70% of all orders are delivered under 1 hour, and 95% are delivered under 2 hours right now. So the more stores you have, the more closer you are to the customer, and faster the delivery. So we'll continue to do that. But when you have more stores, then you'll need to sell a wider range of products out there to make each store viable. So I expect going forward, the FMCG category and the convenience thing will go up slightly in the cities, may go up to around 30% or 35% at 65%. So that's how I see it going forward.
Mr. Reddy, the company has maintained a strong focus on scaling up their store network. Do you plan to expand physical stores or now your focus shifts to the online business?
No, our online is just one more channel. The growth is going to be led by the physical stores. Medicines are, 40% of all medicines are bought for acute needs. And for when you have an acute need, you really don't wait for the customer, wait for any delivery boy to come. Forget about 4 hours, which some of the online guys are promising right now. You can't even wait for, say 10 minutes. If you have a need, then you have to go down and get it right now. And the fact is, in India, the distribution of pharmacy is not by any means, leaving a gap out there. And all of us know when you get down from your apartment, there's a couple of medical stores there, right? For your acute needs, you will need to go out there. And we are there, taking care of customers both for their acute and chronic needs. A pure play online thing can only do chronic needs out there, where that you can wait for the medicines. You're buying on a monthly basis and also you are able to buy. But for us, that alone is not enough. So we will be available to customers from whatever channel they come. Earlier, they used to come on phone into the store. Now they're coming through online. As simple as that. I mean, we view it purely as that, but we understand that obviously, there is some benefit to people coming online. You get to know exactly you have the data, you're able to easily, reach out to the customers, you're able to upsell and all that. But that cannot be the business. The business still is, making sure that you are, giving the customer the right product at the right time at the right price. And that offline stores do just as well as online stores. Primary growth is going to come from our offline stores, yes.
What is the average revenue per store, and how soon do the stores achieve a positive store level operating EBITDA?
Sure. So the average revenue across the company today is around 1.65 crores per year, roughly 1.65, 1.69 or something like that. Roughly around 15 lakhs per month, you would say, 14 and a half to 15 lakhs per month. And this is the post GST and everything else. There's the actual hard number. So pre GST, it would be around 15.2, 15.3 lakhs or something like that. So for us, the average store costs around 26 to 30 lakhs to set up, including the build out cost, which is 6 to 8, inventory, which is 18, and rental advance, which is around 2 lakhs. The average store breaks even. 60% of the stores break even in 3 months. 75% of them break even in 6 months. And they reach an operational EBITDA at the store level within around 2 to 2.5 years. And that number is usually between 9 and 10% operational EBITDA at the store level.
Tell us something about the technology-driven supply chain and distribution infrastructure that the company has in place to support operations.
Right. So I'm glad you asked that question. One of the first hires we had in the company was a CTO. And I very quickly realized when I first wanted to start the business that the most successful medical stores were the one which carried the reputation of having everything available. So typically people would say XYZ store is great or ABC store is great. They'll go all the way out there to get it because they would say, once I go there, I know I'll get everything. But that reputation you can only gain by putting a ton of inventory. Because India is a place where there are like millions of Me Too drugs for every single molecule. Every single doctor is writing some other thing or the other, depending on whatever is, he's been canvassed to and all. And so, which means getting all of them in any one store is very, very tough and you require a huge amount of inventory. Now, when I wanted to basically start the company, there was no way I could have 50 stores in Hyderabad, all of them with a huge inventory, which was available in 1 or 2 stores in the center of city. So what we did was we basically set up our entire, software system from day one. We built it completely from ground up, where the software at the store level was connected to the warehouse inventory. So all of them are connected. So each of the stores could, by typing, see the inventory of all the other stores, figure out where if you ask for a product, it is not there, we could easily tell you, okay, that product is out there, and we would send someone to pick it up and give it to you. Or most of the time, the product would be available in warehouse. At warehouse, we would have a very large super set of inventory. Mm-hmm. So each store then was functioning as the best, stock store in the city. And we would, if not same day, we would get it to you next day, guaranteed. So that would be a big thing, and that's what basically drove everything for us. So all our software is built on Java, MySQL, and Linux, completely open source. We don't, pay any licensing fee and all. And today, almost everything in the company, straight from, figuring out which store we should take. So entire thing is mapped. We have an app which is open to our employees. Employees are 15,000 employees when they're going from home or going to work or whatever. If they see a store which they think is reasonable, is suitable for MedPlus, they'll just take a picture and put in the phone number of the landlord out there. Our real estate team then sees where the coordinates lie, call the guy, take the process and make it all completely online. We get a bunch of referrals through our employees. Every store we take, we pay our employees 10,000. So they're incentivized to get it. They know best, what to get. We have used technology in that way. Delivery apps, almost everything you can think of is based on our own technology out there. And we have now extended it to basically start building out a proprietary automatic picking mechanism.
Okay.
So every day, 250,000 odd products are sent from our warehouses to our stores to replenish the inventory. Now this requires roughly around 900 to 1,000 people. A, very expensive. B, times of Diwali and holidays and all, people don't turn up. Stores basically have a problem of getting the supplies. So we started figuring out a solution. We couldn't find anything out there. Anything which is available was very, very expensive. So we ended up actually devising something out there, completely homegrown, which basically is a series of racks where all the canisters are placed. And there's a conveyor which runs through this set of racks. Every time an order is basically generated at the warehouse, our employee just picks up a crate, scans the barcode on it, puts it on the conveyor. And as it moves across the warehouse, it stops at every rack where the barcode is scanned and appropriate items from both sides of the rack are picked up and dropped into the box. And it keeps going from, rack to rack till the entire warehouse is picked. So 50% of all the tablet needs from our company today are picked using this automatic system. We just launched it 3 months back. We expect that we'll be able to launch it across the country very quickly, and that'll take an investment of around 30 crores odd. But that'll then save us a ton of money and allows also to scale up very, very rapidly. So for us, we are a company which is hugely tech enabled, and we have basically used it for, even, let me give you one more example. So a lot of times, manpower is extremely tough to get, trained manpower. We get trained pharmacists who come to the store, we train them, we basically make sure that they are fully well versed in all the software as well as the prescription reading out there. But still, doctors, it's very difficult to decipher everyone's handwriting. And some doctors, it's very, very tough. So when these guys have a problem, they use an app. They just take a picture of that and click it. And it goes to our head office where there's a bunch of senior guys who are sitting out there. It flashes across the screen of that guy and he immediately sees that. So the employee says, he basically clicks on it and says, I'm unable to read number 3 or number 4, so he just click that number 3 or number 4. And this guy basically types out the number 3 or number 4 and sends it back. So immediately, without really having to worry about, am I doing the wrong thing and all, people can take advantage of the remote, let's say, expertise which is there in the company. So and this is something which, it's a problem which is peculiar to our industry. So we had to basically set it up, and we set it up. So we use technology in several ways.
That's great. Company has a sound financials, very good profitability. What are the key business strategies that you would be working on to further enhance the profitability for the company and for the shareholders?
See, for us, of course, we have got 7 states. We have got the warehouses already set up and all. Now, as we add more and more stores out there, the company becomes more and more profitable, obviously. So we continue to basically do that. The cost of the corporate and everything else remains more or less same. So continue to add that. That's one. Second, private label, which now comprises something like 12% of our overall sales. Private label is basically products which are made for us by reputed manufacturers. And these are both medicines and non-medicines. 7% of our sales comes from private label right now in pharmacy. And the rest basically is FMCG and all. So all these now, we continue to focus on increasing the overall availability range of products and everything else. That is a big driver of profitability for us. And as India goes more and more digital, right, we basically know that more people will go online. It will make it easier. So not everyone is going to be online. So I have a store in, let's say, X neighborhood, maybe 4 or 5 people, and there are 10 stores out there. While they all may do something through WhatsApp and all, they don't all have fancy websites. And there will be people in that neighborhood who will want to go online. So those people who, when they want to go online, because I'm also there, they come to my website, because if they want to return and all, it is much more easier. So we will take business from the rest of the guys as India becomes more digital. So I don't really have to go crazy advertising and all. All I have to do is be present, make sure that, people know that we are there for online thing, and that's enough. And we would always be the preferred ones because we are able to deliver faster than anyone else. Today, as I said, we deliver in 2, going forward, we'll deliver in 1 or even less. So we expect that as India goes more and more digital, we'll gain some from the neighboring stores out there and all. And finally, we'll continue to automate, we'll continue to do stuff out there in the warehouse and all. And that will not only give us operational this thing out there, it will also increase our profitability. So for us, same store sales growth, increasing the number of stores, private label, gaining from the digitization of the country, and automation of the overall thing.
Mr. Reddy, lessons learned from COVID crisis, and how has it altered the functioning of the company?
Well, we have all learned to use Zoom very well, I must say. So it's much more easier for us to manage the diverse set of, this thing across 7 states. We have now gotten used to making sure that we are able to talk to all our employees, all our managers across the board. So that's fantastic. But other than that, what COVID has taught us is we have to be really, really flexible. There were a time when we would, it was written in stone that our stores would be open from 7 to 11. We had to basically start functioning for a limited set of hours, limited number of people, lots of, limitations and constraints out there. So it just means that, if you think, you have to be flexible. That's all. You can't just So that's the big lesson for us.
Thank you, Mr. Reddy, for your time. It was a pleasure speaking with you, and we wish you all the best for your IPO.
Thank you very much. Thanks for having me.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.